Investments in equity markets are gaining traction with time. And why not? The traditional instruments like land and gold, they come with some inherent limitations like low returns, high incidence of taxes, handling problems, etc. So when equity investments are considered as a little risky, the better way of investment that emerged was mutual funds. And now even small cases are gaining traction with time. So if I talk about small cases versus mutual funds, now both of these instruments, they invest into equity, but the mode of operation is different. So what happens is, when you invest in small case, then you actually have the whole control of the portfolio. You will see the stocks in your demat account. You can buy and sell as per your wish. You'll also receive dividends and you can enjoy other corporate actions in your own individual entity. The benefit of investing into a small case is that there will be a fund manager, an expert who will guide you throughout your journey. But what happens in mutual fund is that mutual funds is like a trust which collects a pool of money and then invest in many instruments. So when you are investing in mutual funds, you won't have the control of any stocks, but you will have the units of that mutual fund. So that is why in case of mutual funds, the amount of investment can be as low as rupees 500. Here you just have to pick a fund and sit back. So however easy and convenient it may sound, one of the major drawbacks of investing in a mutual fund is that it comes with some inherent limitations. Due to regulatory reasons, mutual fund must limit their stakes to 5 to 10% of any company, and because of that they miss out on many big opportunities. So if we talk about cost while investing in a small case, you have to pay a upfront fee, and then there will be some minimum investment amount which depends upon one small case to another. So this fee is constant. Your amount of investment can change as per your wish. Small cases also allow you to do an SIP. If we talk about mutual funds, minimum amount of investment can be lower than that of small cases. They also allow to do SIPs. But the major problem is that mutual funds charge a fee based on their AUM. That means bigger the AUM, bigger is the size of the expense ratio that is charged by the fund. And this expense ratio makes up for the bonuses and salaries of the manager. So what happens is, what we strongly feel is that here a fund is actually focused on increasing their size of AUM rather than improving the performance of the fund, which might play against the financial goal of the retail investors. Now, as the asset under management increases, the amount of funds that needs to be deployed also increases. So now fund managers have to buy substantial stakes in companies. So here fund managers are very reluctant to invest in micro cap companies and they start missing out on opportunities. And even when there is any change in fundamentals, selling also become difficult. It is very easy to drive a car, but it is very difficult to drive a heavy vehicle, say like a truck. As retail investor, you might find some small cases costlier if your investment amount is very low. But this cost remains fixed if you are opting for a flat fee charges, while in case of mutual funds, the cost will increase with the increase in your investment amount. If we talk about diversification, sometimes you will find that mutual funds are invested in more than 100 stocks, and because of that, risk is diversified, but you also end up getting very nominal returns. Now, another problem is that mutual funds come up with a lock-in period. They even charge an exit load if you try to redeem your funds before a certain time period. Now, whenever you invest in small cases, there are no lock-ins or no hidden charges. Now, if you're looking to choose between small cases or mutual funds, I would say that totally depends upon the kind of control that you want to have on your portfolio. If you are looking to have full control over your portfolio, we would suggest you to go for a small case where you will find a variety of options based on different ideas and themes. While if you're fine with sitting back, then you can also go with mutual funds. The key is, before selecting any small case or mutual fund, you need to do a careful analysis. Investment in securities market are subject to market risk. Read all the related documents carefully before investing.